Yo guys, happy Friday. Good to be back with you all as usual. All-time high week, guys. We're back. We are so back. What was it? 5 months. I think the last time we broke the all-time high to the 108 mark was in January. So here we are, broke through to 111K. I love the way the 111 looked, for some reason
So
on my
good.
monitor. It just looks so good.
So good.
So nice. Feeling good. Stocks, bonds, etc. Still feeling a little questionable. Trump's out there with the tariff thing, playing that hand over and over and over again, trying to get deals made, and it's kind of tanking stocks. We went down a little bit today, but hey, Bitcoin's looking great in this environment. Super excited. Do any of you guys have MetaPlanet?
Alex does. Alex
Yeah.
does. He's happy.
Yeah.
I bought the dip. I didn't own any for the run up, but I bought the dip around like $6.70, and it's trading at like $7.50. So I'm happy this morning.
I think I'm going to get into the stock just because I'm very bullish on their hotel business. I heard they have great service, great towels, and I just see that going big places.
John's a value investor.
That's right. I mean, speaking of great service, all three of these guys work for Swan Private. If you want to partner for generational wealth, you got to check out Swan Private, swan.com/private. Get hooked up with one of these guys, text them, call them. Whenever you have questions, you want to make a big buy, run things by them, whatever, they're there for you. Swan Private's pretty sweet. Also, want to shout out Mara for securing the Bitcoin network and supporting the show. Also, BTC and DC. We are working with the George Washington Institute for Competition, and they are putting on this awesome conference in the fall, Bitcoin and policy. It's going to be unique. Hasn't really happened yet. Going to be a room full of, policymakers and, Hill staffers and, lawyers and all the, just going to be all the people who are making Bitcoin policy. If you want to be there, you should come join us. It's the center of this. Look, guys, this is important, right? We want to get good policy that is Bitcoin positive out there. So this is an important time to do it while we've got an administration that will help pass that kind of stuff. So check out all three of those things. Welcome back to Swan Signal Live every Friday, 11 a.m. Pacific, 2 p.m. Eastern. We're here for you talking about the week's news and just hanging out. Glad to have you all in the chat. We always enjoy the chat. So shout out to you all. All right, guys, we got a big docket today. Maybe we should just continue that chat about Bitcoin treasury companies. We've got a lot of action happening there, and it's huge amounts of money. We're talking people coming in.
Super quick. Sorry to interrupt. I just want to echo. I think there's a lot of people. You had a great little comment there on policy, BTC and DC. Yeah. And I just wanted to say, like, a lot of Bitcoiners, like I think, and I understand it. It makes sense to me. They've struggled to kind of get around this politician thing. It's like, why are we like, I thought we didn't like politicians. What's with all this cozying up? What's with the policy discussions? Like, isn't Bitcoin supposed to be outside the government? And that's true. I mean, Bitcoin it's an outside system in many ways, but like, there's also just a tangible reality. You're either going to have policy that hurts you, or you're going to have policy that helps you. And, if you want to see Bitcoin succeed, there's no reason to turn your nose up at building bridges to have a better landscape. Because guess what? Like, most people aren't going to be early adopters like you, and they're going to wait. If there's hostile policy, they're going to feel hesitant about learning about Bitcoin. So like, I want to just speak to that. I understand the concerns, but it's only going to make things better to have policy that doesn't hurt Bitcoin.
Yeah, I understand anti-government sentiments, pro-freedom, self-sovereignty, all of that. All of those Bitcoiner, values matter. However, if we're talking about a world of hyper-Bitcoinization, right, it's going to touch every aspect of our society, and that includes the government and huge corporations, et cetera, and, can't remain like a niche cypherpunk, money forever. So, got to embrace that and try to affect it like in the most positive way possible.
Let me throw a thought in there too. So yes, basically all of the early Bitcoiners, it's all about sovereignty. It's all about like, custody your own coins, make sure you can do transactions without anybody's permission, can't be taken from you, all the things which are all right. And I personally agree with on a big level. However, it's important to understand that we're now entering this phase where there's $900 trillion of assets globally dollar denominated assets that have to recalibrate relative to Bitcoin. There needs to be rails to do that from the traditional finance system. And that's really what the political regulatory stuff and now Bitcoin or leverage Bitcoin equity kind of things are all about. It's about these rails so that massive quantities of capital can find their way into the Bitcoin ecosystem. And this is what, guys, this is what it looks like. This is what adoption looks like.
Yeah, it can be both. It can be both things. It has to be both things if we want Bitcoin to really change the world and fix the money. It has to be both things. So it's going to be different use cases. Bitcoin is for enemies. You might not like it, but it's just a matter of fact. So. All right. So MetaPlanet went nuts today. We talked about that. I still haven't bought any. I have all my money in Bitcoin, guys. Like I'm gonna have to sell and get in. I don't know. Maybe I should start putting some fiat aside now that these LBEs exist and try to take some upside. But I've always been of the mind of like, I don't want to leverage Bitcoin. I don't want to expose to that. I just want to own the asset, right? So you guys are starting to dip your toe into these LBE stocks. It sounds like, and they're running hard. MetaPlanet was up what? I don't even know. It felt like 1,000% or something this week. At one point.
It went up 108% in a single day. And the issue is that like there's not a lot of shares outstanding. This is my understanding of it. I'm not claiming to be an expert on MetaPlanet. My understanding is there's not a lot of shares available. The float is pretty small. In Japan, it's been gapping up and hitting limits every single day. And then it trades. I guess it goes to Germany and then it comes to the US. And in each case, it's just kind of ramping it higher and higher. There's a gigantic short position. I think it's the most highly traded and most shorted stock. I think it's number 4 most highly traded stock in Japan today. And it's the most shorted of the entire securities complex in Japan. So it just creates a very interesting environment. And it's been extremely volatile, 108% up in a single day and then right back down.
Totally.
That's pretty interesting.
Maybe it would help if we talk a little bit about some of the things you need to consider if you're going to participate in these public companies that are pulling off the LBE playbook. There's and some differences between owning spot Bitcoin. There's obviously a lot of opportunity here when you look and see what these stocks are doing. You guys are talking about MetaPlanet and how much it's moved up in the past few days, but then you also have to look. I think it's down roughly 50% since like the high yesterday, something like that. So this is one thing you have to keep in mind is that these are likely going to be more volatile than Bitcoin. So your entry points on these stocks matter tremendously. Your entry point on Bitcoin does matter, but I would argue your entry point on these LBE stocks matters a ton more.
Yes.
Alex talked about, spot Bitcoin. One of the things he mentioned, self-sovereignty, owning your own keys, like all this stuff. That obviously you have that with spot Bitcoin, permissionless, you can cross a border with it. No one can tell you when and where to use it. All that great stuff does not apply to your MetaPlanet or MicroStrategy shares, to state the obvious. Number 2, you have to remember number 3, these are companies. There's a CEO, there's a management team. They're executing this strategy. Some of them might do it more prudently than others. Some might be a little risky with it. There's key man risk. What if something happens to one of these big figureheads? Does that cause the stock to sell off? That's another item you have to consider, that you're not taking that risk when you buy spot Bitcoin. Number 4, you have to remember, again, these are companies. They have some sort of legacy business, or even if they don't, they're still a company, and they could get into some sort of legal situation. This has happened with some companies where they might find themselves in a DOJ investigation for some sort of reason, and that could weigh on the stock. And it's really hard for you to predict if that happens. So there's a lot of opportunity here. This definitely is one of the hottest topics in the Bitcoin world, but you just have to remember the risks you're taking when you participate in these individual company investments, and the risks you're not taking and not having to worry about when you just buy spot Bitcoin.
Yeah,
totally right on the money. These assets participate in a similar long thesis. The price of Bitcoin goes up, and they both benefit from that in similar ways. but they have very different risks as far as your downside. And that's the thing to be aware of, right? So it's like, as long as Bitcoin's going up, like Bitcoin will do well. And these companies, unless there's a major blunder, will generally do well. But the question is, like John said, there are management decisions, there's leverage, there's individual positioning, and these could all add additional risk in material ways that you don't have with Bitcoin. But also, I think something you said, John, I really liked. Your entry price probably matters a lot more. They are much higher volatility. And like if it's like on some of these assets as they rallied up, if you bought the top on SEP or, some of these plays, like, I mean, you were materially underwater for a little bit, like 50% or more. Now, if you held, you did okay. You did fine because Bitcoin kept rallying and we're early, in my opinion, in this. So, but it's still realizing that like timing the entry wrong could have you go through some really material volatility, and you have to be prepared for that. And it's a reason, like, I don't think that like Bitcoin should be your core holding. It should be your core positioning. You should hold mostly Bitcoin. And then if you want to go out on that risk curve, I think these are compelling and interesting stories. I own some. I participated in MicroStrategy. I bought the MetaPlanet dip today. I own a few other names. And that's been great. They've done very well. But you need to understand what it is you own. And I think there's a lot of people that have just gone all in or just like, MicroStrategy was lagging, so they rotated all over to like whatever was doing the best, and then that dropped. And like, you have to be careful. You need to know what you're doing. It's not as easy as just like buying Bitcoin.
I think the same principles apply as buying. It's buy and hold, right? Because it's all underlaid by Bitcoin and the Bitcoin price movement. So if you're gonna, let's say you got 80% Bitcoin, you want to do an 80-20 portfolio, Bitcoin portfolio, and you invest in what you think is the team or are the teams at an LBE company who best manage that strategy, right? And Saylor calls it intelligent leverage. And that actually does matter. Like, it is the execution of the management team matters. So you might want to pick the team that you like and maybe put 10, 20% of your portfolio into them and try to capture some of that upside, but have the same mindset, right? This is like 5-10 year play, right? It's a long-term investment. If you try to trade them the same way as trying to trade Bitcoin, you're going to get wrecked for them. I mean, the vast majority of us would get wrecked. So,
okay. So I'm going to add one last comment to that. Yes, buy and hold, but also, in my opinion, you need to watch this stuff very carefully. The difference between Bitcoin and stuff like this, in my opinion, is I feel confident in buying Bitcoin and just forgetting about it for years and years and years because the system is extremely stable, it's extremely decentralized, and I'm not worried that anything is going to happen to it. There's a lot more risk in something like this because there's management, there's changes in regulation, there's changes in markets. Do you understand the core business of that particular company? Is their core business good? Do they cash flow? Are they able to pay their bills? Those kinds of things. Because if they can't, then at some point they may have to sell some Bitcoin, right? So those are all things to keep in mind. And then the last thing I'm going to say about that is, if you don't have a core position in BTC, maybe don't YOLO into this stuff, right? You need to maybe consider building up a core position, a foundation, if you will, for your wealth, and then start looking at other things.
Yeah.
I'll just put some numbers around it real quick. If you there's this concept of chasing an investment that's appreciating. If you chased MetaPlanet and bought the top yesterday, I see it hit $15 at some point yesterday. It's now below 7.5. It's below 7 on my screen. So if you bought the top, you chased, you're down 50% in 24 hours.
It's going to hurt.
If you bought the top and you chased Bitcoin yesterday, you're down like 2.5%. So, that, I think that just speaks volumes right there.
I do think it's important to know that there is utility here, right? This is not just like a shitcoin trying to grift off the back of Bitcoin. These are novel financial instruments that, Saylor's, the MicroStrategy is building out that provide real utility to people, right? And or to companies or institutions. And it's a way to move fiat into a Bitcoin-based, financial system. So this is, there's risk here, but it's not like without substance, right? These are meaningful and useful, investment tools, basically. And I think that's important to know.
Yeah. It's and I think like just pulling back to maybe some of the theory or the view behind what's happening. we're living through the financialization of Bitcoin in many ways. Like, that is what is happening. And people can have all sorts of opinions on that, and you can view it in all sorts of different ways. But I think the most important thing is that this was inevitable. If Bitcoin was going to succeed as the hardest money, as the best asset, then of course, it's going to be financialized. Of course, there's going to be corporations that realize what it could do for them. Of course, these things are going to happen. So this is inevitable. This is just the trajectory of Bitcoin's monetization, what that looks like, where it's going through. Yep. And there's been kind of two phases to this market. I think there will be more. I don't think we know where it's going. The first phase was struggling companies. You had companies that were basically not doing well, that were never going to do well. I mean, obviously MicroStrategy had cash flow. It wasn't like a terrible business or anything, but it wasn't going to grow in a massive way. It wasn't going to have 10x earnings growth. Metaplanet, they had half a hotel or whatever it is in Japan, right? It's similar. These were companies that were not in a strong financial situation, and they adopted Bitcoin to save the business and to grow. And that was enormously successful. And all of these companies that did it grew massively. We're now moving into, I think, the second phase of this market, which is where you see very, very, very well capitalized players who are not struggling businesses. SoftBank, Tether, Strive, all of these companies kind of coming in and that are able to access billions of dollars of capital easily, relatively easily. And they're now coming into this market. That's a sea change. That's a notable shift. That liquidity has not hit the price yet. Those buys have not happened yet. There's optimism around them for sure, but those buys haven't happened, and there are more of them coming. I think you'll continue to see announcements over the next week, 2 weeks, etc., of notable large players. And so, this is the theme to watch in many ways. And it's a different stage. Now, will there be a third stage? I'm sure. I don't think we're through this at all. Could there be very highly levered players? Could there be players that take risky debt by the end of it? Could there be all of these things? This is all possible. And you need to be very alert in watching this sector versus, just buying Bitcoin. But, it's a natural development. In many ways, it's an exciting development. And in many ways, I think it even solves the problem of I think it capitalizes the Bitcoin industry for decades to come.
Right. Let's take a look at a little data here on this front. John, you want to take us through this one?
Yeah, 100%. So this was a piece, I think it was UTXO Management plus Bitwise did this piece on institutional flows that could come into Bitcoin. And they took an interesting time period. It's basically 18 months. It's from now until the end of 2026. And anyone who's watching this either live or on replay, you'll see the chart. But for audio people who are just listening or do the podcast, they have 4 to 5 different categories here: nation states, wealth management platforms, public companies, U.S. states, and sovereign wealth funds. And they estimate the inflows in U.S. dollars over the next 18 months that they believe could or would flow into Bitcoin. The total, and the order I listed is their order for how big they expect each of those to be. The total is nearly $500 billion. It's about $425 billion. And they give an estimated BTC allocation. This, of course, has to have some sort of assumption of what the price is going to do over the next 18 months, because you have to assume how much are they buying, and you have to therefore assume at what price. They believe these entities are going to acquire 4.2 million Bitcoin, which is about 20% of the supply. So yeah, big numbers. One thing I'll just throw out to the group, which I personally think would be interesting to discuss here, they have wealth management platforms in that graphic listed above the public companies running the MicroStrategy playbook. Personally, I think those should be reversed. Just to elaborate, the wealth management platforms that they mentioned, they gave an example, and they say Morgan Stanley Wealth Management, Goldman Sachs Wealth Management. Those are private financial advisors for higher net worth individuals, really playing through ETFs, I think, is how most of those advisors are going to recommend their clients get Bitcoin exposure. I don't personally see that segment being larger than the corporate adoption running the LBE MicroStrategy playbook. But what do you guys think?
I mean, I could see it. We have, I'll bring the graphic back up. Wealth management platforms above public companies. Obviously, they have access to massive amounts of capital. The public companies are spinning up pretty quickly. I think it really depends on the volume of new companies, and we've been talking about this for the last few weeks. Like, how much demand is there to satisfy? How many companies, I guess, need to start running this playbook to satisfy the demand that's out there for these kinds of financial instruments? And how fast can they spin up? They're spinning up pretty fast, and they're big companies too, with massive amounts of capital. Already, of course, we have the legacy financial wealth management platforms. I mean, they have access to trillions of dollars already right now. So yeah, I could see that. I do think you're right, though, John. The public company should flip with the wealth management platforms, because I think they'll just move a lot slower.
So keep this up. I agree with you. So I think the sovereign wealth fund is comically low, and I think you've already seen over 50% of that, like, today. The idea that sovereign wealth funds are only going to do 7.8, like, we know for a fact, Abu Dhabi has almost $1 billion in ETF already, and that doesn't include spot coins they have, which they almost certainly do. I've had this confirmed a number of times. So, like, I think that number is, like, very low. I think it's surprisingly low, and I think people will be surprised by actually a pretty robust involvement there. US states is a question mark for me. I know we're actually getting the Texas signed, I think, today, and that should be the first, like, really real one, in my opinion.
That's a big one.
It's a big one. It's a
the second largest economy in the country, behind California, I think.
Yeah, and I think they will actually buy. I think there's, like, because the thing is, the New Hampshire one, I know they got it through, but I'm not really so sure on, like, well, how much buying are they really going to do? I don't know. Texas, I could see, though. So that's interesting. I don't really have an opinion on that number. I haven't looked into it too much. Public companies, it's actually kind of cool to see that, because that's kind of been, I've been having calls with my clients and hosting roundtables and saying, I think you could see 100 billion from, but I've said that not including MicroStrategy. So I actually think you could see 100 billion, 70 to 100 billion from companies not including strategy. And I think you could see 50 from strategy, or 30 to 50. Yeah. So that's a little bit low, but that's also where my head's been at. The wealth management platforms, I agree with John. It's kind of funny. I mean, what are we really talking about there? Like, we're talking about high net worth people buying. Makes sense,
Yeah. So in that area, the wealth management platforms, you've basically got kind of two ends of the barbell. You've got, like, high net worth. These are people that are, like, maybe $1 million, $1.5 million, and upwards of a couple of million in terms of net worth. They're not really in the market at all right now. If we look at, like, who's selling and who's buying, it's actually retail and individuals that are selling, and it's institutions that are buying.
Totally.
And the kind of the overall sentiment right now is not that great. Like, the search traffic on Google, for example, on a scale of 1 to 100 for people who are looking it up, Bitcoin right now is pretty low. It's around 25. And until that shifts, until you see retail moving in a much bigger way, I don't know how exciting that's going to be. But when it does shift, you could see pretty substantial. I think this is all I agree with John. This will all be ETF action. That doesn't necessarily mean it's going to be spot Bitcoin. And then on the other end of the barbell, you've got kind of much wealthier families, family offices, and you're getting into the tens of millions and up. Again, when they start to see things like sovereign wealth funds and larger institutional capital move, I think you're going to see a lot of action there as well over time.
Yeah, and I just to elaborate on my thought of flipping those two categories, I just feel like we've seen so much adoption already from the public companies, with MicroStrategy leading the way. Companies announcing billion-dollar plans, tens of billions of dollar plans. Like, we're just, like, further. We're still early, all things considered, but, like, we're much further along that trend than we are your run-of-the-mill Goldman or Morgan Stanley wealth advisor saying, "Yeah, you got to have 5 or 10% of your portfolio." That just, like,
they're just
hasn't happened yet.
They're going to be slower. Yeah,
That's right. And that speaks to Alex's point a little bit of this discrepancy between the institutional excitement and adoption and market and the kind of high net worth retail, etc. This really has been the first cycle where this phase of the cycle, I think it's almost all institutional money coming in versus retail money, even if we're talking like, relatively wealthy retail, because that comes into your advisor market, your Goldman, Morgan, RIA market. Those people they're warming up, they're waking up. I'm having some calls, but they have not been in the driver's seat these last 6 months.
All right, let's move on to the nothing stops this train segment of the show.
Oh yeah.
So Moody's downgraded U.S. debt from AAA to AA1, and Besant commented on this, and our friends Lynn Alden and Luke Groman, who we cite often on this show, have been obviously pounding this drum for quite some time. Nothing stops this train is the meme that Lynn's been using. It comes from Walt's what's the name of the show? Breaking Bad. It comes from Breaking Bad. Yeah. And basically the idea behind the meme is no one, not even Elon Musk, all right, guys, not even the almighty powerful Elon Musk can stop the train, the debt train that is the U.S. Deficit and debt. So Besant spoke about this this week.
I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. Larry Summers and I don't agree on everything, but he said that when they downgraded the U.S. in 2011. So it's a lagging indicator. And just like Sean Duffy said with our air traffic control system, we didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. We inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
This is a very political answer, and it's the one that you give every time. You don't see a big change in the economy or in financial policy, right in the beginning of a new administration. Things aren't going as well. It's the previous administration's fault, which, is probably true because economic policy doesn't really change the economy itself that fast. But, it's a very convenient political answer. Not our fault.
Totally. And I'm sympathetic to that. I'm sympathetic to like, oh yeah, it's not our fault. It's the last guy, but it's not so off. I mean, those were record deficits, and like, you don't get there overnight. It's been a 30-year problem. And, there was some shakeup, I think, in all the policy, tariffs, trade war. Did that add fuel to the fire? Absolutely it did. But, It is the situation, and it's why all the Bitcoiners, it's why Lynn Alden was talking about nothing stops this train. She didn't start talking about that recently. She's been talking about that for 2 years.
Yep.
And it's because we were running record fiscal deficits, and it's like, it's like there was very little shock absorption left in the system. And so then, kind of current admin comes in and, they try to pull some stuff off, and maybe that was wise, maybe that was unwise, maybe it was, it's not even a commentary on the policy, but like what was discovered is that there is very little shock absorption left. There is very little room for any sort of tightening. And this is great because not great, but this tailors into a point I wanted to make. There's been a sea change in how they're speaking and what they're talking about. And what we're seeing now is instead of cut spending, we're seeing run it hot. And Besant's now on TV talking about GDP growth, not spending reductions or deficit reductions. And so I think the administration did learn the correct lesson from what has happened, in my opinion, in that you can't cut your way out of this. Your only hope is to kind of grow your way out of it or mitigate it via growth. And that's correct. And I think that's the same. And Luke would agree with that. I think Lynn would agree with that. And I do think the administration has now warmed up to that view.
Agreed. Brady, do we have that chart that shows, I think it's since 1980, what the deficit? Yeah.
Yeah.
So, I think Besant's answer is technically correct. It was a little political. He just points to the last administration. That obviously begs the question, well, what about the administration before that? What about the one before that? And you can kind of see this trend. You could argue it's been a trend since 1980, But look at when it really started accelerating. It's really the financial crisis is when this really started accelerating. And we've obviously had presidents from each political party since then. But I would say the financial crisis was when this trend started. COVID, you could then argue, put it into hyperdrive. But yeah, this is not really a political party story. This is more like a system level thing. It's theoretically possible to cut spending, but when you look at what we spend the most on, it's Social Security, Medicare, Medicaid, defense, and interest on the debt. And you can put interest on the debt aside because you can't just unilaterally decide you're going to cut that. That's more of a market-based thing. But all the other ones, in theory, you could decide to cut it. But if you cut any of those, you're going to piss some people off. And there's a reason why the kind of Paul Ryan era of the Republican Party is not in power, that they're not super popular anymore, because even if you could argue the logic behind it, it's just not a very socially and politically palatable message. So the spending is going to continue one way or another. And I'll just share one more thing that I thought is interesting. We mentioned this on the show back in February. Don't expect you to all remember, but Pomp, I'm going to end up giving him credit here. I'm going to dig him a little bit, but then I'm going to give him credit. Back in February, he had an event in New York that I did attend in person. And he went on the stage, and remember, this was like less than a month after Trump gets inaugurated. People are like, Doge this, Doge that, Elon's going to cut. Pomp went on the stage, and he was probably trying to say something a little hyperbolic, but he goes, they're going to balance the budget. They're going to do it. And I think it was yesterday or the day before, he tweets and he goes, I was basically wrong about this. I thought they would balance the budget. I thought Doge would do more. Now it's clear this is just not going to happen. So even some of the people who were the biggest proponents of that strategy, in the last 2 weeks, they've realized that this is just not a political reality anymore.
Yeah, I think a lot of people were very excited about what the potential for Doge. I think there are a lot of people who are looking at it like, wow, this is the first time we are going to reverse essentially the rot that has occurred in the government because of fiat for the first time in our lives. We have a real shot at seeing this happen. And you look at Elon right now, and you can tell he's like, I tried. They're not going to pass any legislation that's going to make any of this permanent. And the way Lynn says, nothing stops this train. They're just going to keep printing and printing and printing. So what does that mean? Buy more Bitcoin.
Yep. That's the sound of inevitability. It's the printer.
Yeah.
Yeah, it's crazy. We do have a couple other charts to take a look at. John, maybe this one for a second here. This is the visualization of the big beautiful bill. Is that right?
Yeah. So
yeah,
I think it was by design. The BBB, probably a little bit of a dig, because BBB before this was the Build Back Better bill. Trump says, I want my own BBB.
I didn't even realize that. That's hilarious.
I don't even know if anyone said that, but I just remember seeing it referred to as BBB, and I was like, that meant something different 2-3 years ago.
Build Back Better, yeah.
And if anyone's like a total hawk on this stuff, this is from a few days ago. Wall Street Journal published this. It might not be the latest thing that got passed. The actual bill just passed the House very narrowly to a vote of 215 to 214.
Whoa.
So as close as it could be. Next step means the bill heads to the Senate, and the kind of expectations there are there'll be more tweaks. They rarely just look at something and say, yeah, this is good. So that's where it's at. This graphic here is still representative of what we're talking about here. And it's basically, this looks at the changes of what the path was previously. And as you can see on the right side, this is adding another 2.5 trillion to the deficit, to the debt and the deficit over the next 10 years through 2034. So, this, as we said, this is the nothing stops this train segment. This is just another visualization of that.
That's right. Okay. So point being, can't do anything. Doesn't matter who the president is. Doesn't matter what party's in power. You just can't do anything at this point, and all you can do is buy Bitcoin. Buy Bitcoin. Avoid the fiat debasement that is inevitable. and it's just a matter of how long it'll last at this point. Okay, so let's take a look. Which is this one? I'm going to pull it up because I can't even see it. This is the largest outlays for spending by various looks like agencies, right? HHS is by far the highest. Social Security is next. No surprise there. Then the Treasury, which I assume is deficit facilitation, or sorry, interest payments. I'm not sure. I'm guessing that's what it is.
Correct.
And then defense. Yeah.
And the green, this is apples to apples. So it's looking at October to March of the government's fiscal year 2024 versus October to March 2025. And the green bars represent 2025. As you can see, if you're looking at the chart, the green bars are all higher. So we're just spending more kind of in each category across the board. And again, this is not in response to some sort of recession. And this is coming from the administration that in theory wanted to cut spending and balance the budget. So yeah, to Steven's point, there's a big change of tone here. Alex made the point as well. People were thinking this is the chance for this administration to cut spending, even move the needle towards balancing, even if you didn't believe there would be a full balancing. And it's going the other direction. It's pretty hard to deny it at this point.
That's right. Okay, let's take a look at some price stuff. My favorite chart, which we look at every week at this point, is the Bitcoin and Global M2 chart. I love this because it's just it's a way to fundamentally predict Bitcoin price, right? There's this correlation between M2, which is the global money supply, and Bitcoin, people buying Bitcoin, which makes sense, not just people, corporations, nation states, etc., which just makes sense that there's a correlation there. It makes intuitive sense, right? The more money that's out there, the more fiat that can go into Bitcoin. And M2 has typically sort of led Bitcoin's price, and we see M2 continuing to rise as we have the past couple of months. And we were probably right. Let's see, March 2025. Yeah. So when we started looking at this, it was probably January, February. Bitcoin was kind of down here before the rise started. It was kind of in this dip toward the end of this dip here. And it's now started to follow M2 up. And it looks like, based on this correlation, if you believe it to be true, which it looks like it is on this chart, Bitcoin price is just going to keep following because M2 is still going up and up right now.
Yeah, it's been an interesting chart, and it's been an interesting kind of scenario to watch. And I just think looking at the fiscal and all the messaging that has changed just suggests like we're going to run it hot, we're going to print, we're going to grow, we're going to spend. Like, these things are happening. They were not entering into austerity. And this even got Elon just tweeted, "I have come to the perhaps obvious conclusion that accelerating GDP growth is essential. Doge has and will do great work to postpone the day of bankruptcy of America. But the profligacy of government means that only radical improvements in productivity can save our country." This is basically him throwing in the towel.
It's a capitulation. Yeah.
Capitulation. It's a capitulation. He's saying we can't cut our way out of this, which is true. It's of course true. You can even respect the effort, but it's just not something that's possible because of what we talked about there before. Most of it is Social Security. Most of it is healthcare. Most of it is these things that, you're just not going to touch. It's not going to happen. They're politically infeasible. So we really are seeing the capitulation of the austerity approach.
Hey, good try, Elon. Nice try. Go back to the rockets. It's a little easier than trying to solve this problem. All right, we've got.
Oh my gosh, that's a hilarious statement. Actually,
it's not rocket science.
Yeah, colonizing
for you,
Mars
rocket science is easier.
Colonizing Mars is easier than trying to stop the train.
And stopping the train.
Wow.
Yeah. Pretty good.
Well, this is an interesting one too. Speaking of price and comparing. Well, first of all, I don't have the visual, but Bitcoin hopped Amazon this week to be the 4th largest asset in the world. It's got 2 other Mag 7 companies to go, and then gold. So let's take a look at what Bitcoin is doing in the ETF markets compared to gold. It's quite stark here. Which team is winning? So the first year of the gold ETF, it's so de minimis. It's maybe $1 billion, something like that. Bitcoin was almost 40. Year 2, gold saw about $2 or $3 billion worth of inflows. Bitcoin, 55, and then year 3, gold was like maybe 5, and Bitcoin was 65 billion, right?
I think those are projected.
I assume this is adjusted for inflation. I don't see a note on here, but I assume it is.
Yeah. Well, I love this chart. Like, I'm a gold guy, came from the gold world, and I remember when they launched the gold ETFs, and I can remember everybody in the industry being super excited about how it was going to affect the price of gold, and it was going to be great. And it did. I mean, don't get me wrong, it was good, but the Bitcoin ETFs have absolutely crushed the gold ETF performance, and I think this is interestingly enough, a lot of wealth management platforms did not allow, and still do not allow, their clients. We're talking trillions and trillions of dollars have been excluded from this.
So patronizing.
and it's, what, everybody bends the knee to Bitcoin eventually, right? Jamie Dimon just did. And I think over time, you're going to see all of the holdouts are going to fold, and you're going to see trillions and trillions of dollars flow. So I think that is extremely bullish.
Agreed. It's incredibly stark contrast. Let's see what's next. Speaking of which, I guess JPMorgan CEO Jamie Dimon has said now that the bank will let clients buy Bitcoin. Thanks, Uncle Jamie.
It's gracious
giving us permission to buy Bitcoin. We appreciate it. And see, Bitcoin's hitting all new all-time highs, as we know.
We should extrapolate that on that just a little bit, because I can't let this go without saying something here, because Jamie took every opportunity for years and years and years to poo-poo on Bitcoin. Yeah. Every year at Davos, he beats the drum on how horrible it is and that it's only used for illicit activity, which is absolutely not the case.
Yeah.
I just saw the recent numbers. It's something like 0.14% of all transactions in digital assets is illicit activity.
Yeah.
0.14%. And Bitcoin specifically is 0.28% of that 0.14%. So something like, I don't know, $30 billion. So we're actual illicit activity in US dollars is like 3.1 trillion.
Right? Yeah.
Yeah. So it's not even remotely close. So thanks, Jamie.
Thanks, Jamie.
He also is on, remember at Davos, I think it was like 2 Davoses ago, gets asked a question about Bitcoin. He says, "This is the last time I'm going to talk about Bitcoin."
Yeah, that's right.
Turns out that was not correct, Jamie. Not only are you talking about Bitcoin, but you're making an announcement about how your clients will be allowed to buy Bitcoin.
That's right. Oh man. Makes me think of that Tuttle Twins episode, the latest Bitcoin episode that they did, where they have Jamie, and one of the main characters is the niece of Jamie Dimon, and there's a scene where he's in there playing with his pet rocks, and it's a fantastic episode. Now check out the Tuttle Twins. There's 2 Bitcoin episodes. So much fun, and actually, really great to show your kids too. My kids love them. Got us having a great conversation about Bitcoin. So we did mention that Texas is passing the Strategic Bitcoin Reserve Bill. They did pass it, and we're expecting the governor to sign it. So there's the first major U.S. state to enact an SBR. And we took a look at the legislation a couple weeks ago. Do you guys remember? Is this like a legit SBR, or is this sort of the in name only kind of SBR?
I have not followed closely enough. Texas.
I think it's for real. I think it's the whole thing. It's buying Bitcoin in size. Let me see if I can pull it up.
Yeah, let's see if we can pull it up.
But we could pull up so what it has to do from here apparently is the governor of Texas, Greg Abbott, has to sign it. and he dropped a not so subtle hint that seems like he's going to sign it. It would be weird if he doesn't after the tweet he sent out.
Right. Yeah, we're expecting that to happen.
Yeah, the Texas Bitcoin bill, specifically Senate Bill 21, includes provisions for buying Bitcoin. The bill, authored by Senator Charles Schwertner, establishes the Texas Strategic Bitcoin Reserve, authorizing the Texas comptroller to acquire, hold, and manage Bitcoin and other cryptocurrencies with a market cap of at least 500 billion.
That's right.
Over a 12-month period.
Right. And only Bitcoin qualifies with that threshold at the moment, and probably will forever, because we're hopefully anyway. Well, there you go. That's a legit SBR. Let's see if the U.S. can make their SBR, our SBR.
Oh God, this is amazing.
A little bit more extensive. Let's hear it.
It's called, the bill is named SB 21.
Yeah, I saw that. SB 21.
Yeah.
You got to love that.
This is so funny. Sorry, this is really nuts in a certain kind of crazy way. There was a bill they passed that ChatGPT gave me in 23 that was all about like money transmitter licenses and reporting and administrative oversight. Guess what the bill number was? So it's HB 1666. And this was all about oversight and reporting, and now they're publishing SB 21 to actually buy and hold Bitcoin. I just find that funny.
There are signs.
Meme it into reality.
Yeah.
Let's talk about Bitcoin Pizza Day a little bit. We had some controversy stirred up by Michael Saylor on the day, which I'd love to chat about for just a minute. But before we do that, for anybody who doesn't know, Bitcoin Pizza Day is the anniversary of the day that Laszlo Hanietz bought 2 Papa John's pizzas for 10,000 Bitcoins. And before that point, there had been no medium of exchange transaction like that to set the price of Bitcoin. So that was really the first time that Bitcoin had a US dollar trade price. And so it's a monumental moment in Bitcoin history. And Laszlo is obviously known for this. He's most famous for buying 2 pizzas for 10,000 Bitcoin. But it's also important to know, as Marty Bent reminded us yesterday on Twitter, it's always important to remind people that Laszlo is much more than just the Bitcoin pizza guy. He created the first macOS implementation of Bitcoin and the first GPU miner, right? That was a kind of a 0 to 1 moment. Bitcoin used to be able to be mined on just a CPU on your laptop or your desktop, which is kind of crazy. And then he created the first GPU miner to really speed things up. Of course, now we have ASICs. So his contributions to Bitcoin go far beyond just the pizza purchase. So yesterday was Pizza Day or the day before. And Saylor posted, I think the strategy account posted a picture of the pizzas. And then Saylor said, that we bought this pizza and we paid for it in dollars, right? To make a point, and he always says, don't sell your Bitcoin. So that got some Bitcoiners riled up. I'd love to hear what you guys thought about that tweet.
So, if I was Saylor's PR, if I was running PR for MicroStrategy, I would have said that Saylor should have used his personal Bitcoin to buy pizza. Fine if the company can't do it, but guess what? Saylor's sitting on over 10,000 coins. Homie, spend $5,000 on pizza. Spend it with actual Bitcoin. Now, I understand maybe it's hard to pay wherever in pizza with Bitcoin, but just as a PR thing, just do it. Just go ahead and do it, man. I understand he's trying to say, hey, spend dollars, buy Bitcoin. That's his whole thing, speculative attack. But the only people paying attention to the Pizza Day thing are Bitcoiners. And, I think the move was just playing ball.
Yeah. As a Bitcoiner, I think spending Bitcoin to buy things is actually important. If it's ever actually going to be used as money, I'm a big fan of either buy Bitcoin and then spend it, or spend it and replace it immediately, because it does a number of things. It creates transactional momentum in the real economy. It reinforces adoption, making it move faster. towards being a medium of exchange. It creates additional revenue for companies that are accepting it. It disproves normies who say, oh, you can't buy anything with Bitcoin. It incentivizes more business to accept it. And like you get stuff. And you can always just rebuy it or buy it first. So it's not like you're losing any Bitcoin. So to me, yeah, there's a couple of extra steps and you have to pay some transaction fees, but you're going to pay transaction fee. Well, anyway, there's cost included in that if you're paying with your credit card anyway. I don't know. To me, if you're a Bitcoiner and you want to see it used as money, I like the idea of spending Bitcoin.
Totally agree. I do have to mention this because I think it's hilarious. Have you guys looked at the original post of Laszlo kind of putting out the offer for like, here's what I'm looking for in these pizzas? And
do you have a link?
It's a short. I'll send the link to you. You can pull it up on screen, and I'll just I'll talk about it for now. But it's just like so funny, and clearly these people never, or maybe they did back in their mind, but like this was such like a nerdy niche thing. Like the comments he made when he's like describing the pizza, and he's like, oh, I like these toppings, like you could do this. And then he makes a comment. He goes, I also like regular cheese pizzas, which may be cheaper to prepare or otherwise acquire. Like he was just going into these details that the person, and like looking back on now that it's like 10,000 Bitcoin, and he's like, you can just buy a regular cheese pizza, you know, let's make this cheaper for you. It's just mind blowing to think that this is what it was like. But yeah, so I agree with you guys. I don't think it needs to be so binary of like, you never use your Bitcoin ever to buy something. You know, I like the idea of spend and replace, go into a merchant, signal to them that you want to use their thing, you know, whether it's Steak and Shake or whatever it is. And if you buy $50 worth of an item using Bitcoin, like that's kind of cool. So I'm in that camp, but I'm also not in the camp that Bitcoin needs to speed to be a medium of exchange within the next year or two. Otherwise, it's a failure. I think that's kind of dramatic and overstating it as well. Payments, fiat works pretty well for payments, whether we like that or not. And it has decades, if not centuries, of network effects that Bitcoin's just not going to overcome that in 15 years. So yes, I like Bitcoin as medium of exchange, but it doesn't have to happen next year.
And it's not going to. Like you can't do anything to speed it up. Like Jack Dorsey could put a bunch of Square, units all over the world. It's not going to speed up, the adoption of Bitcoin as a medium exchange. It's not about infrastructure. It's not about like the desire to bring it to fruition. It's about the demand for people to spend Bitcoin. It'll happen eventually. And we all know the development of the money, right?
It's also about opportunity cost, right?
Yeah,
like
exactly.
This is bullish case
too much upside. That's one big one, right?
Yeah,
huge one. And then it'll, in my opinion, it'll start when merchants start demanding to be paid in Bitcoin or give discounts if you're going to pay in Bitcoin, right? Because they want the money. The demand for Bitcoin as a business operator is going to drive the adoption of Bitcoin as a medium of exchange. And if you can put the terminals out there, but if the owner doesn't want to do it and people don't want to spend their Bitcoin, it's just not going to happen. So it's really just a matter of time and the evolution of Bitcoin and the evolution of the adoption of a money. So I don't really understand what the debate is about. It's not like there's a bunch of Bitcoiners saying like we should, like I guess Saylor does say we should never sell your Bitcoin. Someday we will. Someday it'll be money. It's not going to stay a store of value forever. It's not going to stay only a store of value forever.
Mm-hmm.
Yeah. Okay. Any quick hits, guys, before we wrap it up? Are we good? That was a great episode.
We covered a lot here. That was good. And I'm not seeing anything in our list that we missed.
Awesome. Okay. Well, we'll wrap it up then. Come and meet these guys, swan.com/private.
Yes.
Get hooked up with one of our Swan Private reps. We've got, amazing. We'll be your partner. They'll help walk you through like building generational wealth with Bitcoin. That's really the opportunity that we're talking about here. And it is still early. So if you want to be the legend of your family, right? If you want your name to really like ring on through the generations, like be the guy or the girl who bought a bunch of Bitcoin early on, saw the opportunity, understood what was going on, accumulated, and just passed it down through your family tree for generations. Like you have an opportunity to be a freaking legend here, guys. And Swan Private clients or Swan Private clients who work with our Swan Private reps are like on that path. So come and join us at Swan Private. You can go to swan.com/private, click meet with us, and get connected to one of our guys. We'd love to be a partner for you. We also have
Brady, let me throw one
yeah.
quick thing in there.
Throw it in there.
There are side benefits to working with Swan. Not only is there IRAs, not only is there inheritance planning, tax loss harvesting, concierge buys and sells, all the things, right?
Yeah.
But there are side benefits. Like if you're John's client and you ever wanted to like talk about Bitcoin and play hockey at the same time, you can do that. If you're Steven's client and you want to go sun maxing and learn about walking, how to optimize your health and build mass and just be like the healthiest person on the planet, you can do that. If you're interested in firearms and you want to go shooting, like be my client.
Yeah, it's great. Yeah. Just really cool people, as our Swan Private reps. Everybody's just interesting, got something else going on, curious people, fun to hang out with. So it really is a partnership. And we love to meet you. Check out BTC in DC in the fall at btcindc.com. That's going to be held at the Kennedy Center, the historic Kennedy Center in Washington, D.C., right next to the Watergate, the historic, infamous Watergate Hotel. It's going to be a really, really cool vibe there. Something that we haven't seen before in the Bitcoin, conference circuit. And it's a great time, really important time to try to have an impact and be part of the discussion around Bitcoin and public policy. So we hope to see you there. Little shout out again to Mara for supporting the show and securing the Bitcoin network. We'll see you next week, same time, 11 a.m. Pacific, 2 p.m. Eastern. Actually, we won't see you next week. Hold on.
Yeah,
we will. A lot of us will be in Vegas, so we will be off next week. We'll see you the week after that at the regular time on YouTube or on Twitter. And of course, you can check out the podcast. Just search Swan Signal Live in your podcast app, and we will see you in 2 weeks. Thanks, y'all.
Let's go Knicks.
Let's go Knicks.